And welcome back to another episode of the Blockchain Brew Show. I'm your host this morning, Trent, and I don't have a brew with me at 10:08 a.m. Pacific Standard Time. Instead, I have an orange monster. Coming at you with something a little bit different than the usual white monster, which is my monster of choice. Unleash the beast, right? Yeah, so there you go. A little mid-morning caffeine flowing through the veins, flowing through the system. And yeah, we'll go ahead and jump into the news today. Trent is my friend, Real Meta Crypto says. I thought that Trent was John 316's friend, but I guess I have enough friendship to go around. Monsters are bad. Drink coffee. That's what my mom keeps telling me, but you know, I don't like to listen. So here we go. Let's go ahead and dive into the news today. And the first thing that I'm going to cover, well, first I have to share my screen before I do anything. Share screen. The first thing that I'm going to cover this morning is the fact that PYTH network is up 7 on the day. So congratulations if you're holding PYTH. Congrats on the gains. We want everyone out there to make gains. Yeah, the real monster will be your sugar. Well, I drink the zero sugar ones. So it's actually like, you know, the aspartame can't be good for me either. But yeah, I don't like drinking sugary drinks. So I really don't even like eating sweets all that much. I do plan to switch to coffee though, real soon, because what we're gonna do is, which we haven't talked much about this, but it just makes sense. Like what we're gonna do is, you know, sort of brand the brew part of the morning show toward different coffees each morning, and then the evening show will be the beer. So no such thing as no sugar. Well, yeah, I mean, biochemically speaking, it's not sugar. But anyways, I digress. Let's see here. U.S. government taps Chainlink and PYTH to publish economic data on chain. The U.S. government announced on Tuesday that it is publishing economic data on chain to boost transparency for government spending. The U.S. government has tapped Chainlink and PYTH, two blockchain oracle providers, to publish economic data on chain. Chainlink was selected to provide data feeds from the Bureau of Economic Analysis and will publish additional data feeds in response to consumer demand or at the behest, I've never seen that word before, of the U.S. government. A Chainlink spokesperson told Cointelegraph. These feeds include real gross domestic product, GDP, which is the primary marker of whether the economy is growing or weakening, personal consumption expenditures, PCE price index, and real final sales to private domestic purchasers, the company said. PYTH was also selected by the Department of Commerce to be a publisher of GDP data. The total economic output in a year, according to an announcement Thursday. So there you go. We have the tweet here from PYTH. U.S. Department of Commerce has selected PYTH to verify and distribute economic data on chain. Today's announcement by Howard Lutnick and Donald Trump marked of decentralization and validates PYTH's role as a trusted data source. You know, put a +1 in the chat if have a cannabis tea instead. Brew a nice coffee. Yeah, cannabis tea. Is that like cannabis? I don't know. I'll have to look into that. Yeah, you guys are all bullying me into getting rid of my monsters. It's for my good, though. I know. It's for my good. I will never. I'll never get rid of the beer, though. You know, unless I'm just sort of fasting from it for a few days or taking a break or whatever. But you know, the beer is gonna stay. I'm just gonna have to. You know what we need an affiliate link for? It's this product, mushroom coffee. It's this product called Cheers Restore, and it's like after alcohol pills that you take. And it's not like it's not a hangover pill. Like that's not the purpose of it. It's actually a lot deeper than that. It's supposed to reduce the amount of acetaldehyde in your body by half, because when your liver metabolizes alcohol, it releases a toxin in the body called acetaldehyde, which is actually way more toxic than alcohol itself. If you're someone that you need an affiliate with a brewing machine and a shaving machine, this is true. You know, if you're someone that gets red, and you flush when you drink, it means that your body's producing a lot of acetaldehyde. Luckily, I don't actually I don't get red when I drink. I tend to have a high tolerance, so I'm just gonna tell myself that I don't produce a lot. It's got to be the German blood, but you never know. Anyways, those pills are supposed to reduce the amount of acetaldehyde in your body by half after drinking, which means that I can have twice the amount of beer. That's moon math for you. Anyways, yeah, so something about PYTH, I don't know what it is. I don't know if it's just that I have like a bias against Solana. And when I say that, that's just a personal thing. That's nothing to do with our show. Like, look, we cover everything. I might be a Cardano guy, but this is, at the end of the day, a crypto show. So we cover everything. You know, if anyone in our community is making money out there with any coin, like, props. You know, we celebrate you. We want everyone to do well. I just have like a personal bias against Solana. And I trade it, and look, after going to Rare Evo, like, I get that, and I understood this before, but you know, I just really it kind of reinvigorated that sense in me that, look, we don't need tribalism in the space, and I do get that. I don't want to be tribal. I believe that interoperability is the future, and any prominent chain, you know, every prominent chain out there is bringing something to the table of adoption. And I get all that. I really do. It's just, for me, I feel like there's more. I feel like there's more paid shills out there, you know, floating around in the floating around in the Solana content creation space, and I don't know. I feel we went through a period of time in like mid to late 24, where, and you had Crypto Crow talking about this a lot, right? It feels like someone out there was paying good money for anti-Cardano content. I know that sounds crazy. Look, and I'm not saying like Solana directly is doing that, but it really seemed like someone was, and I don't know. I just it also kind of doesn't uphold all of the decentralized values I would really like it to see. But not every coin is going to. Not every chain is going to. We have to understand that too. There's even a place out there for the chains that don't uphold all of the decentralized ethics that I might want to see. Every chain can't be a carbon copy of each other. So, you know, I do know that I need to like get over my some of my biases with that, but I don't know, I'm not quite there yet. Something about, you know, I get it. I stayed out of Sol since the beginning. It's been controversial and smelly, you know, smell bad, you could say. Sol needs a good shower per se. Yeah, exactly. Exactly. And that's just my personal opinion. And because of that, like, I haven't been big on PYTH. I don't know. When you look at the chart too, it's like PYTH has a really good day today, like a 70%, 75% pump, but it also really needed it. Like that thing got absolutely stomped into the ground. So 75%, like a lot of people are still at a loss, or, you know, just barely getting back into the places where they can sort of target a break even. And I hope that, and look, let's be real at the end of the day, in a few months here, I don't think any of that's going to matter. I think anyone that's held is going to be in profit because it's going to do well. But I'm just, call me old school. I'm way more of a Chainlink guy than PYTH. Chainlink was like my third crypto purchase that I ever made. I don't count OneCoin in 2015, which was one of the biggest scams in crypto history. I don't count that because it was never a real crypto. And if I would have bought Bitcoin back then, you know, hey, I would have done really, really well. You know, instead, I got burnt on that, and I didn't think about crypto again until January of 2021. So it's a little bit of my story. Maybe I'll talk more about that another day. We've talked about it on live streams a long time ago, but our audience was much smaller when I did. So maybe I'll have to do a video where, you know, the title is like my, you know, how I bought a crypto scam or something like that. Anyways, if you don't know what OneCoin is, look it up. It's to this day, it's one of the biggest scams in crypto history, and this was back in 2015. The woman that founded it has been on the run internationally for years, and she's still never been found. It's a really wild thing. Not a lot of people in crypto know about it because it's so old. Anyways, now that I've done ranted about Solana, PYTH just sent me on a pissed off rant. Anyways, where did I leave off? Okay, publishing government data on chain is part of the Trump administration's plan to make government spending more transparent in a bid to improve accountability and to make the U.S. a world capital of crypto. Bringing government economic data on chain will provide positive benefits to spot crypto markets, a Chainlink spokesperson said. These include automated strategies that execute based on changing government data, real-time prediction markets for macroeconomic developments, and risk management strategies for decentralized finance protocols. Stablecoins, tokenized government bonds, perpetual futures contracts, real-world tokenized assets, and other digital financial instruments must rely on macroeconomic inputs also to stand to benefit from on-chain government economic data. Proposals to bring public spending data and other macroeconomic figures on-chain are currently fomenting in the Philippines, the United Kingdom, and El Salvador. Traders eye potential gains for crypto markets. The price of PYTH surged by nearly 70% on the news. It was up more even after this article. And Link posted modest gains of over 3% before falling back to around $25. However, Chainlink has been rallying. Oh, it goes on to say that. Never mind. I need to read on a little bit before I jump to make the article better right away. Link has rallied to about 61% since the start, by about 61% since the start of August, going from a low of about $15.43 per token to its current price level. So on the news today, PYTH absolutely ripped because it hasn't been doing anything. Chainlink was already up 63% on the month before this news. So the news broke, it got a nice little 5% pump and then dipped back. Bullish news can come out, but Chainlink has already been running, which leads me to believe it's probably not going to make a much bigger run until the rest of the market is ready. Real meta, have you ever heard of TwoCoin? I have not. I have heard of ToothCoin though. It was something about dental records on chain. I think unless that was either a joke or there really was something to do with dentistry though. It just might not have actually been called ToothCoin. Anyways, next piece of news here. Federal Reserve September rate cut probability rises to 87.3% after unemployment data. So we just got unemployment data, and according to Blockbeat's data from CME's FedWatch indicates that the following release of the initial jobless claims figures, the probability of a Federal Reserve cutting interest rates by 25 basis points in September is now at 87.3%. The likelihood of maintaining the current rate stands at 12.7%. Earlier reports highlighted that the number of initial jobless claims in the United States for the week ending August 23rd was 229,000 jobless claims, slightly below the expected 230,000. The previous figure was revised from 235,000 to 234,000. So the expectation was 230,000. The data came in at 229,000. Okay, so why is this a good thing? Well, the turbulent job market, the struggles right now in the job market are the primary driving force that is pressuring the Fed to cut rates, right? Because the Fed has a dual mandate. One is to achieve maximum employment, and number two is to achieve price stability for the American people, targeting an inflation rate at 2%. So with inflation up at 2.7%, right, the idea would still be to either hold rates neutral, probably to hold rates neutral while we try our best to target that 2% number. However, with a very competitive job market, right, what they say is that the unemployment figures are not rising out of control. However, if you are unemployed right now, it's very difficult to find a job. So with the troubles in the job market and the jobless claims that have been going up, that is the primary force that's driving the Fed to cut rates. Aside from the things that we don't see, right? Aside from the things that are behind the scenes, right? Which is everything from Donald Trump to you could get a little conspiratorial and say, like, the powers that be that really tell the Fed what to do behind the scenes. So who knows what kinds of pressures they're experiencing to cut rates. There's an unspoken pressure from the market, from the stock market and Wall Street, pressuring the Fed to cut rates. And the Fed will say over and over and over again until they're blue in the face that they do not consider that in their decisions to cut rates, right? They have a dual mandate, maximum employment and price stability, right? Employment and inflation. That's their dual mandate. And what Jerome Powell will tell you is that he ignores pressure from Wall Street and from the market to cut rates. Although psychologically, and who knows what happens behind the scenes, I don't know if I think that's really possible, right? Like, Wall Street packs a lot of pressure. I don't care who you are. And if they've been down your throat for a year now to cut rates, you're going to cave at some point. But in terms of their dual mandate, the thing that's pressuring the Fed to cut rates is the job market. And if the expectation was 230,000, and that was reason enough for Jerome Powell to come out at Jackson Hole and say that the Fed is going to pivot and begin to cut rates, if 230,000 was reason enough, and we came in at 229,000, that basically confirms the expectation. It's barely below expectation by 1,000. So what that means is that it sort of confirms the 87% odds that the Fed is going to cut rates in September. So there you go. Next up, stablecoin market cap surpasses $280 billion in market cap. Solana's stablecoin hits $12 billion for a 15-week all-time high. So, guys, this is important stuff here when it comes to stablecoin market cap. It's important for the cycle, and it's important for altcoin season. The total market capitalization of stablecoins has reached a new all-time high of $280 billion, according to data from DeFi Llama. This milestone marks the first time that stablecoin supply has surpassed this level. Additionally, Solana's stablecoin market capitalization has risen above $12 billion, reaching a 15-week peak. The increase in stablecoin liquidity reflects growing market activity and investor interest in these digital assets. So here's the thing. I'm going to let that take us over to our charts for the day. And we're going to look at tether dominance first. And so we're going to go to USDT.D. And here's what you want to look for with tether dominance. Now, usually a lot of minting, Tether just minted another $1 billion in USDT. And Circle just minted like another $250 million worth of USDC. And when you see Tether minting a bunch of new USDT in a bull market, or just prior to a big bull move that we know is coming, guys, they're doing that strategically. They do this cycle over cycle. Tether mints a bunch of new USDT every time that they know that trading volume is about to spike, right? Like trading volume, we're just barely starting to inch into the phase of this cycle where I believe trading volume is absolutely going to explode. And Bitcoin alone is going to be doing, hundreds of billions of dollars in trading volume every single day. So the thing is, when Tether begins to mint a bunch of new USDT, they're doing it ahead of a spike in trading volume, and therefore you're doing it ahead of a big bull move that is incoming, that's loading as we speak, I believe. So then what we need to look for when we see a bunch of new minting is we need to ask ourselves the question, are these stable coins being used to purchase more Bitcoin and more altcoins? Are this influx of stable coins, are they being used for trading, and are they being used to buy assets? And the answer to that is yes. The reason we know that it's yes is because Tether dominance is falling. So we go to the weekly chart on Tether dominance, and as Bitcoin dominance was climbing, Tether dominance was also climbing, right? So that's a double whammy for altcoins, right? If you have the entire crypto market cap and a bunch of it is flowing into Bitcoin and a bunch of it is flowing into Tether and stable coins, that's less that's flowing into altcoins. So you want for an altcoin season, you want Bitcoin dominance to enter into a downtrend, but you also want stablecoin dominance to enter. And the biggest stablecoin by far is USDT. So, from March, Tether dominance has fallen by almost half, or by exactly half. And then over here, oh, this is a weekly chart. Well, that was January 23. Sorry. On the weekly, we were rejected off of the 200 moving average back here. I'm going to go to the daily chart because the weekly is a little bit less relevant for Tether dominance, in my opinion. Okay, here we go. We had this peak back here in June. And now it seems like Tether dominance has fallen by about 25% since June. And, back here on July 8th, we lost the 200-day moving average on Tether dominance. We began to fall. We fell under the 21 moving average. Right here, we have this series of bearish divergences on the stochastic for Tether dominance, and right now that is beginning to play out. Now, I could see sort of an inverse head and shoulders right here for Tether dominance, and that could send the dominance back up like this to possibly get rejected again off of the 200 moving average. So that, this inverse head and shoulders has a target. It has a targeted rejection, I believe, off of the 200 MA that would then send it, grinding back down. So that's what I see for Tether dominance, and this is bullish for altcoins, in my opinion. Next up for TA. Come over here to Bitcoin. Let me come check the comments. It does look like stables are going to be really big once this bull run is over. Yeah, and that's part of why I think you have to go to the daily chart when you're assessing these things. The reason why is like you go to the weekly chart and the data. Well, sorry, I was on USDT. Anyways, what happens is you see this data that's like, oh, it's dropped in half, but it's dropped in half since like back here a couple years ago. And the reason why is like all of the minting, a bunch of minting happens during a bear market, but it's not being bought up right away. It's not being used to buy up alts right away. That takes some time to set in once you're in a bear market. When we're in the cycle phase that we're in right now, like you look at the daily chart and you see that the minting is preparing for a big move in the near future. But when minting happens in a bear market, that takes some time, right, for capital to flow from the stablecoin minting into new altcoin purchases. Really what happens is that stablecoin minting in a bear market, it flows into Bitcoin while Bitcoin dominance is going up. So you see a lot of minting stablecoins are going to get really big once this bull run is over. They're going to explode because of legislation, right? But there will come a point in the bear market where all of those stable coins that are being minted, which is incredibly bullish, all of that bear market minting is going to flow into Bitcoin. And then Bitcoin dominance is going to move, right? So Tether minting in a bear market signals Bitcoin dominance is about to fly, right? Tether minting in the aftermath of a Bitcoin dominance breakdown means that altcoins are about to fly, right? Real Meta says, I think stables might create a market or narrative for privacy coins. Yeah, sure. Especially, Midnight. Midnight is going to do some really, really incredible things for crypto in the institutional space. And I do believe that institutions are going to use stable coins on Midnight for privacy reasons. And it's selective privacy is what it is. So you can disclose only what you want to disclose. If you have a company and you want to pay everyone on chain with crypto, then you don't always want like the CFO knowing exactly what the COO is making, or you don't want, say the blockchain brew grows and we start hiring a bunch of people. Like we don't want a social media coordinator knowing that the thumbnail girl, shout out to Nesquik. We don't want the social media coordinator knowing that the thumbnail girl is getting paid more, you can see that on chain, right? But with Midnight, institutions and businesses can do their payroll on chain with selective disclosure, so that even though it's on blockchain, they can't all go look and see what each other's salary is because of selective disclosure. So, you know, for those reasons, yeah, I agree, Real Meta, that privacy coins, stable coins creating a narrative for privacy is going to be, you know, a big narrative for midnight with institutions. Anyways, change my banner down here, charts and TA. All right, let's get into a little BTC. So here we are on the weekly chart for Bitcoin. We're really, you know, still in the same place that I've been saying. You know, we have seen a spike earlier this morning above, back above 113. And what I'm still targeting here, I think the more that we hang out in this range, the BTUC1 exclamation point, I think the more that we hang out in this range here, the more likely, check in on the comments. Okay. The more we hang out in this range here, let me get rid of all my drawings. The more likely it is that we're going to fill the CME gap completely up to $117,000. And there's some confusion about this. You know, yesterday I just saw another crypto content creator on YouTube whose name I will not name. I saw this person get a little confused about this. Like, when you're looking at the CME futures on the daily chart, you know, you come over here and it's like, I don't see the gap. Well, the problem is you don't see the gap because, number one, you're not looking close enough, right? Like this green candle right here was the Friday close. And this close was at $116,850. Well, where was the Monday open? The Monday open was $113,450. Well, candles are supposed to open where the previous candle closed, right? So that is a gap. That is a gap on the daily chart. We're just not looking close enough. The other reason that we struggle to see this sometimes is that gaps to the upside almost always create a gap that's easy to see with your eyes. The reason why is because the gap to the upside is always going to be, you know, higher than the close, and therefore the gap will be visible. But when you have a gap to the downside, the Monday open can be lower than the Friday close, but not necessarily lower than the bottom of this previous candle right here. I hope I'm making sense, because I'm just trying to teach something that I had to figure out too, right? Because what happened this weekend was that just by instinct, I kind of knew that, hey, we're way lower on Sunday than where we closed out on Friday. And I just knew that by instinct, right? From just existing in the crypto markets for 4 years. I sort of just knew that by instinct, right? So what I did was I came over to the CME futures chart and I said, wait, I don't see the gap. But then, you know, I very quickly realized, hey, this candle looks weird. The red candle should have started up here, right? And so that is a gap. And when you come down to the 4-hour chart, when you lower the time frame, it allows you to see the gap very clearly, right? So this over here, where am I at? Okay, yeah, here it is. The gap is right here on the 4-hour chart. I'll take my indicators off the screen. Hide indicators. So you see the red indecision candle up here, the red doji candle. And then you see the next 4-hourly candle open down here. And so there's the gap in between this whole space right here. And that gap is sitting up here at, you know, $117,000. Like the body of the candle is actually sitting up here above 117. So, you know, in my opinion, the more that we hold the range that we're in right now, the more likely we're about to come up and fill that gap. Let's see here. And let's go ahead and we'll turn my indicators back on. Then we'll move back over to the Bitcoin chart on the 4-hour. Here's another really important thing for our Bitcoin technical analysis right now. I'm going to remove all my drawings from this chart. Okay. We have a hidden bullish divergence coming in here for Bitcoin on the daily. And that hidden bullish divergence is marked by a swing up in price with a let me make sure I have this right. 1 second. So identifying hidden bullish divergences, look for a lower low in price action with a momentum indicator showing a higher low. Well, that's regular bullish divergence. Hidden bullish divergence happens when the price is making a higher low, but the oscillator is showing a lower low. Got you. So, yeah, that's coming in. Yeah, that's coming in right here. The price is making a higher low, while the indicator is showing a lower low, right? So here's the higher low on price action, and here's the lower low on the RSI. That's hidden bullish divergence, as opposed to, you know, if we go spot a back here, this is an example of regular bullish divergence. You have a swing down on price with a, well, that's not it, because it would be a swing up on RSI. Let me find one. I'll find a good one. When did we go down to 74K? Yeah, so back here at 74K, we had this huge bullish divergence, a swing down on price with a swing up on the RSI, right? A hidden bullish divergence is different. It's a swing up on price, meaning the price made a higher low. The price made a higher low from this low back here. But the indicator, I guess to be most accurate, I got to stretch it to the same point. Okay, the indicator made a lower low. So this is hidden bullish divergence, and hidden bullish divergence is we should put a poll for if we will close up or down today, for sure. Hidden bullish divergence is a continuation. It's a continuation signal, a trend continuation signal. Regular bullish divergence, what that indicates is that you throw a brick on a trampoline, and what happens is, as the price is going down, there's the momentum is out of gas. There's not as the price is going down, the momentum indicator is still up, meaning that there's not enough downward momentum to sustain the dip in price that just happened. So it's like throwing a brick. It's like throwing, or maybe not a brick because it would just break it, but it's like throwing. It's like jumping onto a trampoline so that you go so far down to the bottom of the trampoline that you have nowhere to go but bounce up. That's regular bullish divergence. Hidden bullish divergence signals a continuation of an uptrend. So you have this macro uptrend on the daily for Bitcoin where you have a low. Well, I'll go from back here. You have a low, a high, another high, another high, and then you have a higher low. And then you have a high and a low, and this is just signaling, this is just ranging right here. It's consolidation. But back here, if you zoom out and you say this is a low, and then this is a high, and then this is a higher low right here, and then this is a higher high, a higher low, a higher high, and this is a slightly lower low than back here, which signals consolidations, but it's a higher low than back here still. So we're, when you zoom out, we're still putting in higher highs and higher lows. And so the trend is the trend is up on the wider, when you zoom out. The trend is up, and the hidden bullish divergence signals a continuation of that uptrend. So there you go. I think it's important to note that a trend continuation pattern. So it's important to note that, in my opinion, Bitcoin is still Bitcoin is in an uptrend, and it has put in a hidden bullish divergence on the daily chart, signaling that we will continue the uptrend. So that being said, there's something quick that I want to show here for Cardano Spotlight. And I go over here to our profile. I must not have shared it. But that's okay, because I know who posted it. Plutus. And then let me kill the music here. So Charles Hoskinson saying here that that digital asset treasury companies holding ADA are going to explode within the next 90 to 180 days. I didn't share my screen. Let's see. Share screen. All right, here we go. Start this over. I need to actually add it to the screen, and now I'll start it over again. Here we go. The volume's kind of low. I have it up all the way. But
So DATs and Cardano are inevitable. If I had to predict, I'd say we'll start seeing them within 90 days to 180 days. There's going to be all kinds of flavors that come through, and we'll see DATs probably for midnight as well. It's very profitable for people to pursue these things. It's just you have to do them with the right wisdom and foresight, and if you do, then they can be very beneficial to the ecosystem. So DATs and Cardano are
so there you go. That's Charles Hoskinson saying that digital asset treasury companies holding Cardano and Midnight are inevitable, and that Cardano treasury companies that we're going to be seeing them within the next 90 to 180 days. That's Hoskinson's prediction, which would be super bullish for Cardano adoption and solidify Cardano's place as a chain that deserves institutional interest. And I'll say this over and over again, back in mid 24, even through the end of 2024, we had all of these, and even some early 2025. Until we saw the Grayscale ADA ETF filing, and until we saw ADA being included in the strategic reserve. But last year, we had this narrative going around that Cardano is never going to have institutional interest. And then, lo and behold, Grayscale files an ETF for ADA to convert their ADA trust into an ETF, and then you have the ADA inclusion into the strategic reserve, and this is going to keep happening. I wonder if he wants to come on your guys' show. Eventually, I think that will give it enough time. I think that we'll get there. But yeah, this idea of a bunch of Cardano treasury companies popping up is one of the next logical steps, in my opinion, that we're definitely going to see, and it's going to continue to solidify Cardano's position as a chain that deserves institutional interest. So there you go. That wraps it up for me today. And let me bring my music back up while I sign off. And yeah, that wraps it up for me today. Thank you for tuning in to another episode of the Blockchain Brew Show. Thank you, do not you. Thank you, Real Meta Crypto. And we will see you tonight at 7:30 Pacific Standard Time for our regularly scheduled programming of the Blockchain Brew Show. Arguably the better version of the show where we drink beer. So there you go. Smash up the like button and subscribe to the channel to become a member of the Brew Crew, the most hydrated community on YouTube. Cheers.